Does PPP count as gross receipts for ERTC? It is important to understand the ERC and PPP interaction when calculating the refundable tax credit for determining ERC eligibility. The term gross revenues, as used in Section 448C rules, refers to the entire revenue for the taxable year, which typically includes all sales, net of refunds and allowances, and all payments paid for services. According to the Internal Revenue Code, amounts that can be excluded in calculated gross receipts are the Forgiveness of Paycheck Protection Program, PPP, loans,
shuttered venue operators grants under the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act, part of the Consolidated Appropriations Act, 2021, P. L. 116-260.
Restaurant Revitalization Fund grants under the American Rescue Plan Act. With that being said, PPP loan forgiveness is not included as federal taxable income. Under ERC Section 448C, and associated rules, they may be considered gross earnings. Employers may, as long as the safe harbor is used consistently, deduct the amount of PPP forgiveness from gross sales when assessing eligibility to claim the ERC for a specific calendar quarter. Please be aware that the PPP loans, SVOG funding, and RRF grants are the only three COVID assistance programs to which the gross receipts exclusion applies. The various relief bills featured a number of financial aid programs, but not all of these funds are exempt from gross income for purposes of determining ERC eligibility. In order to determine whether an organization qualifies for the Employee Retention Credit based on a drop in gross receipts, the IRS provided a safe harbor that permits an employer to omit specific amounts received through other coronavirus economic assistance programs. While an employer could qualify for the ERC, if its gross receipts for a calendar quarter fall by a specific percentage, compared to a prior quarter, how gross receipts are calculated is crucial. A company's total income is already reduced by the sums collected from the other coronavirus alleviation initiatives mentioned above. Unless the safe harbor is applied, they must be counted among its gross receipts. Even though the ERTC expired on October 1, 2021, firms can still submit a Form 941X request for a retroactive ERTC refund. This form may be utilized to adjust employment taxes within 3 years of the first return, or 2 years after the employer's tax payment date. Therefore, depending on when they initially filed or paid their company taxes, qualified firms who did not initially claim their ERTC may still be able to do so through 2024. Even though the ERTC is no longer available, eligible employers can still apply for the credit by updating their filings for their 2020 or 2021 taxes. The credit is valid for earnings earned or paid between March 13, 2020, and December 31, 2021. Employees' eligible pay may include the cost of employer-provided health benefits. The ERTC is open to organizations of any size. Employers should know that this retroactive reimbursement is only available for the tax years 2020 and the first 3 quarters of 2021. The qualifying requirements do not apply for the fourth quarter of 2021 or the tax years 2022 and beyond.